Cardano is the biggest joke in crypto. Its very existence is an insult to this industry, a Cardano critic once said. The truth is that we ought to have bade Cardano ADA farewell a long time ago. For the longest period, it has been drowning in the sea of lows and underperformance with no lifeline in sight. It's high time we let go. A few years ago, Cardano's native token ADA fell 10% from peak to trough after critics slammed smart contract testnet errors and complained that the blockchain wasn't fit for purpose as a decentralized finance platform. These claims came days after ADA hit a new all-time high in anticipation of the Alonzo hard fork launch, solidifying its position as the third largest cryptocurrency by market cap. At the time, the cryptocurrency was trading at $3.09, but it fell to a bottom of $2.58. In contrast to this current moment, the figures were quite better. The highly anticipated launch of smart contracts was targeted to enable developers to build decentralized finance apps to lend, borrow, and trade assets without intermediaries. This feature enabled Cardano to take on other smart contract platforms such as market leader Ethereum, but critics were not so sure that Cardano was up to the task. At the time, Eric Wall, chief investment officer at crypto fund Arcane Assets, said, "Cardano was not built for the current DeFi landscape, and its current state is going to require tons of workarounds for developers to build certain types of common DeFi applications." Meanwhile, Cardano founder Charles Hoskinson's response was to call the accusations noise and FUD. Perhaps he doesn't get the point. The Cardano ecosystem is laced with so many disadvantages. It's not necessarily about FUD or skepticism about the platform, but valid reasons. Then the bulk of criticism was about Cardano's so-called concurrency issues. Difficulties around multiple users interacting with the protocol at the same time surfaced as developers finally launched the long-awaited Alonzo testnet. According to the critics, the concurrency difficulties MinSwap experienced were the result of Cardano's use of unspent transaction outputs, or UTXO, which were used to track users' funds. They asserted that future DEXs looking to build on the network will face similar issues too, making the network impractical to use for leading market maker Uniswap, for instance, which processes over 10,000 transactions. A critic commented, "Seriously? 6 years of peer-reviewed research and $90 billion plus market cap later, and the first app on Cardano can't even do concurrent transaction processing, aka the very thing you need for DeFi." Nonetheless, MinSwap tweeted, "It's unfortunate that we have to shut down our testnet temporarily. We've gathered enough data from our testers to improve the fundamentals of our DEX. In the next few days, we'll publish our postmortem, our scaling solution, and when the testnet will be opened up again." So according to many, Cardano started on the wrong foot, and it should have been dumped to the lowest of lows. But it hasn't, courtesy of what Charles Hoskinson calls resilience. Cardano has been holding on pretty well, but there would be a time when we have to let it go, and it appears to be not so distant. After Terra Luna's devastating crash in May of 2022, Bitcoin's permabull Max Kaiser suggested that Cardano ADA could follow in the footsteps and head for a catastrophic fall. He claimed that Cardano ADA could be the next big loser and experience the same cursed fate as UST. Well, this was highly expected last year, and it was even one of the recent concerns when Cardano rolled out its first stablecoin JED in January 2023. However, the words of a Bitcoin maximalist and fearful Cardano users were not enough to sway Cardano. The 88 coin price is nothing to be proud of right now, but is still steady. This makes us wonder whether Cardano's ecosystem has a hidden source of confidence that we know nothing about. Perhaps some secret funds, maybe. However, recent discussions within the Cardano community have centered on the potential massive sell-off of the Cardano ADA token by major platforms such as Robinhood and Celsius. While the platforms have different reasons for their actions, the risk of a significant dump has raised concerns among the community. A crypto expert, identified as Chris O on Twitter, started attaching a screenshot of some figures. All the FUD around at Robinhood app and at Celsius Network selling ADA is somewhat amusing. Here's an estimate of their holdings. Let's address each platform separately and why it's a non-event for price. Rick McCracken tweeted, "I don't think it's FUD. I'm actually personally a bit concerned because that is ADA frozen that will be released into the wild. Not too concerned though, just need to watch my CDPs don't get liquidated because they decided to dump in the middle of the night." Simply put, Cardano enthusiasts hold divergent views on the situation. Some argue that a sell-off would not be extraordinary for the Cardano token, dismissing negative speculation as fear, uncertainty, and doubt. The rationale includes the fact that the total holdings of Robinhood and Celsius represent only a fraction of the ADA's trading volume, so users have had ample time to transfer their ADA to other wallets. They believe that the event has already been factored into the market and that the negative sentiment surrounding it is more influential than actual sales. But others remain puzzled by the situation. They point out that Robinhood has set a deadline after which all remaining ADA will be sold at market value, and as a result, Jump Crypto, responsible for managing crypto for Robinhood, will have to liquidate its remaining holdings immediately. On the other hand, Celsius has more flexibility and is likely to sell off its ADA holdings gradually over several months. The main question is how Jump will proceed, and the options range from selling off the market to depositing the assets onto centralized exchanges. Nevertheless, the Cardano community remains on high alert as the possibility of major dumps by Robinhood and Celsius looms. The divergent opinions surrounding the event continues to fuel discussions, leaving both enthusiasts and skeptics eager to see how the situation unfolds in the coming days. But there are other reasons to be worried about Cardano. In an email sent to US-based users on June 28th, UK fintech firm Revolut announced that it was ending support for 3 major cryptocurrencies. The company stated that US users will not be able to buy Cardano, Polygon, and Solana through its app, effective immediately. Then, at an unspecified date, users will no longer be able to hold or sell those cryptocurrencies. After that date, Revolut will automatically sell the tokens and deposit the equivalent cash into each user's Revolut account. So why did Revolut make this decision? It's primarily due to the SEC charges against the 3 cryptocurrencies as securities. Plus, it followed in the footsteps of other exchanges that have all done likewise. Furthermore, with a warning of a 50% crash, popular crypto analyst Benjamin Cowen cautioned that Cardano ADA, Solana Sol, and one other altcoin could soon implode against Bitcoin. Cowen told his 748,900 Twitter followers that he believes that ADA, Sol, and Polygon are going to show further weakness against the crypto king based on historical price action. Now, looking at ADA, Cowen predicted that Ethereum contender could decline more than 50% from its current value against Bitcoin, the ADA Bitcoin pair, a repeat of what happened in 2019. Exactly 4 years ago, ADA Bitcoin was at 900 sats, same as today. Approximately 5 to 6 weeks later, it was at 400 sats. The altcoin reckoning can be brutal, he said. Recently, renowned tech mogul and billionaire Mark Cuban engaged in a Twitter debate with former SEC authority John Reek Stark, sharing his views of the future of cryptocurrencies and blockchain technology. In a series of thought-provoking tweets, Cuban boldly alleged that a staggering 99% of tokens are destined for bankruptcy, drawing parallels to the fate of early internet and startup companies. The billionaire further emphasized that while the cryptocurrency industry may experience significant casualties, the remaining winners will undoubtedly become game changers, as is the nature of technology. Now we are talking about tech. You are in my space, John. I don't comment, I do. My entire career has been people telling me why the companies I started were ridiculous and not needed, until they found themselves using them. Smart contracts are about 6 years old. Maybe the name, he tweeted. However, Cuban directed his attention to the SEC, hammering that its role should be to facilitate funding and support for startups while ensuring investor protection. As a result, he urged Congress to modify existing exemptions to allow for clear regulation processes and viable paths for cryptocurrency exchanges, as these aspects were not mutually exclusive. The fiery exchange of tweets came in response to Stark's tweet, where he expressed skepticism about the scalability, efficiency, and security of blockchain technology. Stark raised concerns about the flawed nature of smart contracts and the absence of redress mechanisms, comparing them with the regulatory oversight and consumer protections offered by financial intermediaries. But the truth remains is that the crypto industry continues to evolve, and only time will tell which predictions will hold true and which vision will ultimately shape its trajectory. Is this the point that we say goodbye to Cardano? Well, we don't have all the answers. As I said, only time will tell. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video. Perhaps it will be filled with renewed hope about our dear friend, Cardano.